Welcome to BetterBooks with Kathy Houston. This is our payroll section. Payroll is a very complex item for me to help people with, and this is because there are many types of payroll out there. Some have payroll with their accounting software, some have outside vendors, some have their accounting software linked with their payroll software, and some don't. So what I want to show you is what amounts should be listed on your balance sheet and what amounts should be listed on your income statement or your profit and loss. I will also discuss each payroll account and explain how they are calculated. So let's get started. The biggest mistake that I see small businesses make is trying to handle payroll without using a full service payroll company. The penalties and interest from paying or filing late just one quarter can pay for the payroll service for the entire year. So what is full service payroll? Full service payroll is where your payroll company deducts the taxes from your bank account and makes the payments for you. They also file your quarterly payroll reports and mails and files your W-2s at the end of the year. If you have full service payroll, you should not have any numbers on your balance sheet. You should only have payroll liabilities on your balance sheet if there are payroll taxes that have not been paid. Self-service payroll is where you pay the taxes when they are due and file your own forms. Self-service payroll will show payroll items on the profit and loss and the balance sheet. Whether you have full or self-service payroll, it does not mean that the amounts on your income statement and balance sheet are correct. So let's look at your payroll summary and your financials to see how they reflect the payroll numbers. So let's pull a payroll tax and wage summary report to check your balances on your balance sheet and your income statement. Using this example, your payroll wages that should be listed on your income statement would be $7,689.53. Your total payroll tax expense listed on your income statement would be $609.85. All of these are highlighted. This is the employer's out-of-pocket cost for payroll. All of the non-highlighted items are deducted from the employee's pay and are not expenses to the business. If we look at the P&L and balance sheet, it is easy to see where the numbers populate. So whether you are a full service or self-service payroll client, your P&L on the left is the same. The only difference is that if you are self-service and pay your own taxes, you will have payroll liabilities on your balance sheet until they are paid. Just like we discussed with the auto loans and the sales tax payable, these are just holding accounts on the balance sheet. They do not affect your profit and loss. They are a holding account that you can apply payments to. So if you look back at the payroll summary, the highlighted items are expenses to the business, but all of the federal and state withholdings on that page are included in the payroll liabilities. Again, some of the liabilities are the business's expenses, and the others have been withheld from the employee's paycheck and will be remitted by the business to the proper tax authority on the employee's behalf. The next slides will discuss each tax and how it is calculated. If you are having payroll tax issues, my hope is that the next couple of slides will help you resolve those. Federal income tax. This is the employee's federal tax that is deducted from their income. This amount is determined by their withholding amount from their W-4 and is paid on their behalf to the IRS via the 941 form. If you have full service payroll, your payroll provider pays this on your behalf and files the payroll reports for you. If you do not have full service payroll, you pay this amount on a weekly, monthly, or quarterly schedule, along with the Social Security and Medicare that we will discuss in the next couple of slides. And that's based on the amount of withholdings. So based on the amount of withholdings that you have, the IRS is going to determine whether you are a weekly, monthly, or quarterly payee. So the 941 form is filed on a quarterly basis, where your payments may be made on a weekly, monthly, or quarterly schedule, again, depending on the IRS and the amount of withholdings that you have. For Social Security, the employee pays half and the employer pays the other half. The employee's half is deducted from their wages. The employer is responsible for withholding and remitting to the IRS via Form 941. On Medicare, the employee pays half and the employer pays the other half. The employee's half is deducted from their wages. The employer is responsible for withholding and remitting to the IRS via Form 941. This is the 941 form where the federal withholdings, Social Security, and Medicare are filed on a quarterly basis. Federal unemployment is paid by the employer quarterly. This form is only filed annually. Here's a link to the IRS 940 form, and just know that the employer is responsible for making quarterly payments and filing the 940 form by January 31st for the previous year. Here's an example of the 940 form. State income tax. This is the employee's state tax that is deducted from their income. The amount is determined by the employee's withholding and is paid on their behalf to the state's Department of Revenue by the business. Tax rates and filing requirements are going to be different from state to state. Your state unemployment is paid by the employer and filed based on the state's Department of Labor requirements. Congratulations on finishing the advanced payroll training session. Payroll is complicated, and I always suggest for clients to use a full-service payroll company. They take the guesswork out of the filing requirements and allows you to focus on your business.